You believe this is an opportunity now to get in, particularly on the HSI. Explain your thinking, your rationale.
It's a big opportunity. In fact, I was overjoyed to hear the other analysts ratcheting down their expectations, because that only adds fuel to the fire as far as I'm concerned. I'll take the other side gladly. Our basic thesis is a contrarian one, and we'll show you some charts later, I hope, and I'll show you that prior protests in Hong Kong's history over the past 50 years have been excellent long-term buy signals. Not necessarily immediately. For example, we've seen less than a 10% decline from the time of the protests in early June, but over a long-term basis, some of the resulting rallies, or the rallies that follow those protests, have been stunning. And but there's another consideration. Here at Elliot Wave International, we look at stock markets from the perspective of patterns. That is, we see patterns that repeat over and over again. And over the past 18 months, the whole world has in fact seen a corrective period. Many of them, seeing declines of 25% or more. And the pattern of that decline has been a corrective pattern. We call it a three-wave decline. And the sentiment evidence that the protests have added is just simply adding more fuel to the fire.
Mark, what does that historical precedent tell you about the timing, about when to move in on this trade?
Sure. I don't know if you have a chart that we sent you, the buy on the protests chart that you can show.
We do. We can bring that. Yeah, Mark, we can bring that up again.
Okay, sure. Well, I don't know if you had shown it. That's fine. But yeah, if you could bring it, let me describe what's going on here. You can see in the lower left-hand corner of the screen the first major protest. This was the leftist riots of 1967. This followed a 50% correction in the Hang Seng. And while it wasn't an immediate buy signal, one would have to have held for a more than 20% correction at the time, over a period of, I think, 4 months. But it was an extraordinary buy signal over the long term, because look at the advance, over 1,200% to the high in the early 70s in the Hang Seng, followed by a bear market after that, of course. But then look at the other examples. You see the taxi driver strike in '83 and the large rally that followed that. Then you see that the Tiananmen Square sympathy protests in '89. Again, this wasn't an immediate buy. The market dropped by a good 20+% from the time that Martin Lee led 1.5 million people through the streets in 1989 in May that year. But look at the resulting rally, or the rally that followed, more than 500%, about 523%, I think, over the next several years. Right. So again, the signals that were generated, and we're using this as a sentiment indicator, so I'll use the word signals. The subsequent signals after that, 1995, 2003, 2005, 2011, 2012, and even 2014, these did not generate as large percentage gains in Hang Seng, but they were immediate. We're talking within a period of about 5% or so.
Mark, this is David in Hong Kong. I just want to pick up on what you mentioned there. I mean, just because price drops doesn't mean the market becomes cheap. We had a story yesterday that the earnings recession in Hong Kong is shaping up to be the worst since the crisis. So how do you marry valuations with just simply buy the dip strategies?
Well, we look at valuation as a measure of sentiment as well. You know that during large bear markets, toward the end of them, valuations do get very underpriced. And we are seeing valuations come down. So I'm sure your people you've had on have talked about the price-to-book ratio in the Hang Seng. They could easily go down much more. But what's important to us is that we're seeing a marriage of sentiment and pattern, again, Elliot Wave pattern. And that pattern is showing a completed decline, certainly in the near term from the April high, and that it's time to look to the upside, if not for the intermediate term, then of course, perhaps even the long term.
Yeah, and Mark, you were talking about just where the positioning is here at the moment, and we have one of your charts as well, where you show this persistent short selling that we're seeing in the Hang Seng here at the moment actually translates to a long-term bullish type of trend. I'm just wondering, what does that actually mean? Can you explain a little bit more about that? And what would you actually be buying at the moment, too? Sure.
Well, as you can see, the great exception, of course, is the global financial crisis, the 2008 period. There you see a spike in the Hang Seng or the Hong Kong short sell ratio, but it did not immediately translate into a rally over the near term. And that is, of course, a possibility at any time. No sentiment indicator is perfect, but you can see generally over the long term, with the exception of the 2008 period, high short sell spikes in the ratio have been bullish over the long term, and that's the trend is your friend, and we think that's going to support a bull market rally at this time as well. As to what to buy, I'm a fan of relative strength, and so I think it's very interesting that the Hang Seng Property Index, as well as the Infotech Index, which includes Tencent, for example, or Tencent is its dominant component, are probably going to continue the trends of the past. That is, this bear market we've experienced over the past 18 months is really just it's a normal correction within a longer-term bull market, and there's no reason why those sectors that have outperformed, such as property, such as Infotech, should not continue to outperform in the future.